We also got Pranav Sayta joining in. Pranav, you want to come in on this? Are you impressed by the fact that they've reduced it from 5.1 to 4.9 and for next year, sub 4.5?
Absolutely. I think that's a great move. They have tasted success over the years because of the great macro management, I would feel, and that continuity is very evident. They have not compromised on the fiscal deficit at all. In fact, they've improved significantly. So I would think full credit to the government for this through the period, particularly also in this budget. Despite all the expectations of welfare measures being higher and so on. So I think it's a great move. Yes, of course, from the direct taxes side also, there are lots of measures. Maybe we can come to it.
So let's unpack it one by one. Let's start with the capital markets focused tax changes. So long-term capital gains tax, short-term capital gains tax, some categories for 2 years, some for 1 year, and STT. So let's unpack that portion first.
Right. So I would feel that the short-term capital gains tax increase from 15 to 20% was something that I wouldn't say was completely unexpected, given that probably they wanted to temper the short-term trading a bit, and that might have been the provocation as well as raising some revenue. Also some amount of equity in taxation. If a salary taxpayer, a normal business income, small business earner pays tax at 20-30%, short-term capital gains tax, probably they wanted to show some equity as well. So that's something that was pretty expected in some sense by me at least. The long-term capital gains tax was a little of a surprise, yes, indeed. And I don't know how the market will take it, because I don't think the market expected it as well.
Not too well so far.
Yeah, not 12.5. But I think that looks a little early in stage in terms of implementation. I would have felt that given that there is an STT in place, given that the collections from STT are so robust, given that they want to give a fillip to the domestic capital being invested in risk-bearing financial assets, which has been going so well, that's one move that I thought was a little earlier than what I would have expected in the normal course. But certainly I think overall the steps have been good. Another thing which, of course, one has to see the fine print, but it seems that debentures, etc., also might probably go into the normal tax rate bracket instead of the 20%. So last year we saw the indexation benefit go away on mutual funds and so on. And now if the concessional tax rate also on that capital gain goes, which one has to see the fine print, if it goes into the regular slab rate, that might be another big move.
But that could be good for deposits?
That could be good for fixed deposits, and probably and that has been the provocation.
Yeah, that is so the purpose.
That seems to be the provocation to bring.
I don't know, we all can agree with. Actually, just one thing. Also, MLDs is such a small.
No, that's dead already.
That's dead,
MLD,
right? Yeah.
You know, we killed.
A couple of years ago.
Yeah, 2 years ago. We killed direct access to bond markets now. That extra incentive that you had versus mutual funds. So if you go to mutual fund, you get taxed as normal in fixed income. But in the bonds, if you were listed and you bought, there was a capital gain of a listed instrument, concessional rate. That's gone. So in some sense, it's fair, right? I mean, Ravi is directly investing, and I am investing through mutual fund. Why should he benefit? I mean, why should I not be same as him? So in some sense, it's a fair thing to do.
Yeah.
And it's for the super smart dudes in this country, treasury guys, and
the big quantum of money.
Big HNI.
Yeah.
This government, let's
level
it all. Sabka saath, sabka vikas.
Okay. Okay, Mr. Sayta, anything else on the tax front? Because there's a lot of other stuff.
I would feel again abolishing angel tax is a big positive, especially for entrepreneurs, small businesses, startups, the whole ecosystem. And including for foreign investors who always wanted to enter the private equity and VC funds, so to say. So I think that's a great move indeed. The dropping of the foreign companies' corporate tax rate from 40 to 35 was again something that was very, very welcome. I think it was expected as well, because when the corporate tax rate on Indian companies came down, they had not brought the foreign company corporate tax rate down. So I think that again is a good leveling off. In terms of both foreign companies as well as Indian companies. Also, some of the trust building measures, the TDS rate rationalization, etc., seems to be a good move, very good move indeed. Again, focus from a personal income tax standpoint on the new tax regime, increased standard deduction, and some amount of new tax regime tax reduction.
Do you think it brings it on par? Because the problem was always to move people from old tax to new tax. The new guys are happy to come into new tax, but if you're already used to all those Section 80C benefits, it's difficult to wean them off. Does this bring more parity on the face of it?
I would feel, again, those who probably get the allowances of HRA, etc., are going to continue to want to stay in the old regime. But most others, I think, are slowly moving into the new regime. There are only big allowances which are more in the nature of house rent allowance, etc., which will probably stay out.